I just wanted to start out with, just some basic intros. For those folks who I haven't met, my name is Charlie O'Donnell. I'm a partner at Brooklyn Bridge Ventures. Brooklyn Bridge Ventures is a super early stage seed and pre-seed fund based out of New York and continuing to focus on New York. Hopefully at some point we'll return to a time where location matters a little bit and we get to see people in person again. And I'm super excited to have Jess from Sequoia here with me. And before we dive into all of this VC talk, you are, I guess it's not so newish anymore, but you had a whole pre-VC life. And I'd love for you to share a little bit of context of your background before you joined Sequoia as a partner.
Sure. So prior to Sequoia, I was a founder and CEO of a company called Polyvore in the fashion and social shopping space. It was a arduous 9-year roller coaster ride. Really high highs, really low lows. We were like hot in consumer for a second, not hot. SEO fell off a cliff, no growth, lots of growth. Consumer is a tough space. Overall, we ended up doing quite well. We were acquired by Yahoo in 2015, and it was actually a really great outcome. But I learned a lot along the way, and in particular, I think I realized that working on a product targeted at women and pitching to almost entirely male VCs who didn't really get the space was pretty tough. And so that's why I decided to move to the other side of the table. I realized that I think there's a lot of innovations that should happen in women's spaces, and that I might be maybe a little better equipped to understand them. So I ended up at Sequoia and co-founded Allraise, which is a nonprofit dedicated to diversity in tech. Prior to Polyvore, though, I was a product manager at Google. I worked on the earliest version of Google Maps on things like printing driving directions, which used to be a thing.
Gotcha. And you have an engineering background, right? Or
I did computer science at Stanford.
Gotcha.
Stanford
Cool. So now that you're sort of 3-ish or so years into this, the VC side of things, just out of curiosity, how was it, your experience of it differed from your expectations? Because there's a lot of folks, I have people in my inbox every day asking me how to be a VC, and I'm not sure they totally get what the job's all about. And I'm curious, you were at a startup, Stanford background, you should have known of all people what being a VC is like, but I'll bet you it was sort of different in some ways than you might have expected.
Yeah, it is pretty different than what I expected. Just to be very honest, when I joined, I remember when I signed my offer letter at Sequoia, I was like, I'm not sure this is for me. I don't know if I'll like it. I might be gone in 6 months, right? Because at my heart, I like to build things. VCs are not traditionally building anything. You're partnering with founders, and I love working with founders, but I don't know if I'm gonna last. And since then, it's been almost 4 years, and it turns out that there are actually a lot of different ways to do the job. At the heart, you're trying to intersect with awesome outlier founders, and then once you end up partnering, figure out how to help make the founder and the company as successful as possible. And there's a lot of different ways to do that. There's so many different approaches to sourcing. There's lots of different ways of picking and thinking through different investments. And I guess what I've been surprised to find is certainly at Sequoia, there's a diversity of styles, and I've been able to figure out over time my own style. And it does involve a lot of building. So I've been surprised to find how much time I spend actually building stuff inside of Sequoia, and then in some extent, actually helping founders, whether it's closing candidates or execs, working on personas together and trying to figure out customer discovery. So it just really depends. It's such a bespoke job, and it's been fun to find a style that works for me that is also helpful to the founders.
I think that's super interesting, because it's very easy for people to perceive that the job should be done the way it's currently being done.
Yeah.
and therefore may not see themselves in the job because they don't necessarily fit
Yes.
with
Yeah.
how other people do it.
Yep. Yeah.
So you found a way to be a builder as a VC.
Yeah. It actually started with All Raise. Like I remember I found myself doing what a lot of people do. Is I went to lots of events, met a lot of founders, uh, took a lot of coffees, and was just very opportunistic about just meeting, as like packing my calendar for 14 meetings a day with like different founders. And I found that I'm an introvert. I was exhausted. I wasn't finding things that were really interesting. And then I was just like, at my heart, I'm a product person. I'm a former CEO, I'm a founder. How can I build something that could be like a magnet
Hmm.
instead of just randomly going for coffees? How do I put
Right.
a signal out there? And then so with All Raise, we actually, part of the impetus for All Raise was this program called Female Founder Office Hours, which was, it brought together 10, just 10 at the time. Now it's like hundreds of mentors, female VCs, and just said, hey, female founders, come chat, like get 45 minutes of free advice and just help, and we'll teach you how to fundraise. And so we did that, and huge demand. It was like 500 people applied in a week. And then that program's just scaled. And as I've met more female founders through that program, I realized like it's allowed me to kind of think about how do you almost like source programmatically. And
Right.
then building on that, at Sequoia, we just announced this recently, but Sequoia has a sort of our own crash course. We call it the company design program, where we bring together cohorts of founders and then walk through anywhere from 3 to 10 weeks of curriculum developed by the Sequoia partners on things like customer personas, how to build a culture deck with Alfred, who's the CEO of Zappos, how to think about strategy with Rulof, who's the CFO of PayPal. And we just go through all of that together. The class bonds, we do almost like, we create, we kind of actually do hands-on work together, and then the founders critique each other's work. It's like a
Hmm.
lot of fun, very concentrated. Then you come out with this network of, or community of founder friends, and some of the foundational elements of how to build a company that endures, like all done right at the seed stage. So there's a seed version that I sort of spend most of my time on, and there's a Series A and B version that Rulof runs. And we're doing it virtually, so it's not just in the Bay Area.
Hmm.
Well, we tried it virtually, and that ended working. But we also had folks from Europe join as well. Yeah.
Gotcha. Uh, the mark of a really good former CEO, finding a way to pitch the product in the answer is really key there. So excellent job. Um, so first of all, I totally hear you on the aimless coffee meetings all day. I mean, I don't even like coffee, so I too have had to find a way to figure out how to scale my
Yeah.
engagement with founders, and don't think for a moment that the 100 or so RSVPs of folks on this call aren't people who I'm going to look at to see what kinds of companies they're building, and
Yeah.
who's in New York, and what's going on.
Yep.
So
Yep.
totally hear you on that. What's some of the best advice you've gotten from other investors, actually, as you've joined the VC circuit on being an investor?
Yeah. Um, I've been told this is an apprenticeship job. My partner Rulof likes to say, you can be an 18-year-old chess grandmaster, but you can't be an 18-year-old surgeon. It takes time and practice and like learning
Hmm.
all the things that could go wrong in a surgery,
Hmm.
or like just learning and watching someone else. And I didn't think I quite got that, but when he first said it, but now that I'm 4 years in, I realize like there are ways that companies can go wrong, that business models can go wrong, that like markets are good or bad, that I just didn't know any of those things when I started. And by watching the arc of the various companies that either I work with or are out in the industry, or listening mostly to the rest of the team and hearing the stories of like, this is what went wrong with this company 20 years ago or 10 years ago, or
Right.
this market has these dead bodies in it, or like there's a lot of competitors here you should think about. There's just a lot of like arcane knowledge that I just didn't know, that being with a great team can kind of help give you a little bit of that boost to get started. So that was a great piece of it. Another one, Peter Fenton at Benchmark was on my board when I was a founder, and he said, do a Series B and find a great investor who you can watch on a board, right? And being able to partner and see other great investors and how they work, especially if they have very different styles,
Right.
has been really interesting. I ended up doing the Series B for Ironclad, which
Mm-hmm.
the A was led by Steve Laughlin at Excel, who is a fabulous co-investor and like knows enterprise really, really well. And this is the, versus I came from consumer. So that's been a wonderful like partnership, friendship, and then also just the chance to see like the lens through which he views the company versus the way I view the company. That's actually been really, really helpful too.
Yeah, no, I
A great
totally hear you
co-investor
on
to
that.
send people to apprentice under.
For sure. And I've been super fortunate. I started my career in VC working for Fred Wilson and Brad Burnham at Union Square Ventures. And before I started my own firm, I was working for Josh and Howard at First Round Capital.
Yeah.
But I tell you, what's interesting is Josh always used to be the first one to say, yeah, I've had all this experience, but like he built half.com in the late 90s before there was mobile, before there was Facebook acquisition. And so that experience is useful, but the world also changes very quickly too.
Yeah.
So it's always important to figure out like, okay, like that was good for that company 5 years ago, but how do I like reinterpret that for today? Because, and I think a lot of times VCs, we might lean on our experience a little bit and maybe not be conscious enough about
Yeah.
how
And
it applies.
overly pattern match. That's for sure.
Yeah, for sure. Okay, so we hear a lot about VC brand, okay, and I mean, I don't know how many people in the call have like heard of Sequoia. I mean, it's this little tiny, cottage kind of outfit and in the valley, but for those few people that have heard of it, like it's arguably one of like, if not the top VC firm in the world. And VC brand feels important. It's something that I think founders are told is an important thing to get, top branded firms on their cap table. How have you actually just on like a day-to-day basis, like how does being at a like top firm impact how you operate, kind of day to day? And is there any way in which like it's maybe not an advantage?
Yeah. Yeah. Well, to that, I would say though, the thing that's most important in my opinion is the individual, not the
Mm-hmm.
brand of the firm. Like at the end of the day, you're adding a board member who's going to be with you on your cap table for like the 10 years it takes to build the company. And
Right.
someone who's a true believer in what you're doing, who gets you and your style and is going to actually work hard to help you build the company, I think is probably the most important thing. Um, I think after that, maybe you factor in brand. I do think I have noticed that the Sequoia brand it does help unlock some doors when more likely to get maybe a funding announcement, like engineers to respond to.
Just sorry, I want to interrupt you just quickly because somebody in the chat just said we're on mute,
Am I?
but I don't
Sorry,
think
can you
that
hear
we
me?
are. Can everyone say whether they hear us or not? Yeah, okay. I
Okay.
think it's just that one user who, okay, that's fine. Sorry about that. I just
All
wanted to
right,
make
no
sure
worries.
everyone was getting us. Okay, cool.
So I think it does help. There's like a little bit of signal that it can send for um, engineers responding to your cold outreach, just a slightly better odds. And I feel like startups are a matter of like low odds multiplied across so many factors that every
Mm-hmm.
little boost like can help quite a bit. And then in particular, I think it helps with raising your next round.
Right.
That often helps, and then also helps with the valuation for the round right after. That's maybe one of the things that I've observed that was not as obvious to me until I went to the investor side. But there's also like big drawbacks. Like I think some people think, I think Sequoia's brand's, it's like known for, oh, it's been around a long time. It's winning high performance, like back some of the top companies, but that can be intimidating also. And so, I often have founders tell me like, oh yeah, you were my last stop on my pitch tour because I wanted to make sure I was perfect first. I'm like, you don't need to be perfect. Nobody, I mean,
Right.
nobody's perfect, right? And it just gives us like less time to decide and due diligence because you got to us last. So that's maybe one of the disadvantages. But
I actually heard that
complain.
same thing. I remember a New York-based founder who was turned out to be pretty successful, and he raised his seed round right at the time that I was an analyst at Union Square, and he raised from another New York-based firm that I won't mention. And I said, wow, wait a second, but we knew each other back then. Why didn't you send this pitch to me? And he said, well, geez, like if I thought that I could have gotten money from Union Square Ventures, I definitely would have pitched you. And so it's very funny to think that the firm that he did take money from and pitch was kind of his safety school.
Yeah.
And I'm sure on that firm's pitch deck they talk about how good they are because they were able to win his deal, but they don't realize that they were actually his safety school.
Yeah.
But I'm sure that happens.
So,
There are
yeah.
probably many people that are intimidated to pitch you or Sequoia because of that. I'm sure that definitely happens.
Yeah.
So let's talk about that actually, like getting in front of you, right? There are a lot of folks who on the call are thinking like, yeah, Jess seems pretty reasonable, and I might like to, to pitch her. As you think about the teams that you've gotten to spend time with, whether or not you actually pulled the trigger, can you talk a little bit about the sources and what those sources sort of signal and indicate? Like what is the best way to get in front of you in a way that actually makes you feel like, yeah, if I got a deal from this source, that might be helpful.
Yeah. Usually another founder just saying, hey, this is someone I know who I greatly respect. And I know what it takes to be a founder because I'm one. And this is someone I think would be successful. So that's usually the best route. But my email is also on the website. So I get a ton of cold outreach as well. Actually, another reason to come earlier to us is, I prefer, if possible, having a little bit more time to just get to know each other one-on-one. Because like I said, it's like a 10-year marriage, right? Of you and your board member or someone on your cap table. And knowing each other, even outside the context of a pitch, is really helpful. The last investment that I led was in a company called Moss, MOS.com. It's an edtech fintech company. It helps people get access to all the free financial aid that the government offers in one simple form. And when I was introduced to the founder, Amira, it was not actually, she wasn't even pitching at the time. Someone was just like, hey, you should just, I think she felt she didn't have enough, I think, women on her cap table. So she asked, she was asking around with the All Raise crew,
Mm-hmm.
like, hey, I just want to meet some female investors at some point to add to my cap table at some point. And then our first conversation, we just talked mostly about our personal backgrounds. Like I didn't even ask her a single thing about the numbers in the business, or I barely understood what the product did, but we just kind of got to know each other. And there was a click, and I could tell we had a lot of shared values and feelings about culture and how to build a company for the long term. I could tell she had incredible grit. She's a former human rights activist who
Oh, cool.
helped lead the Arab Spring and turned Tunisia into one of the only Arab. I mean, she has a crazy background. So we mostly spent time on that. And then, as it was time for her to start fundraising, that's when we started talking. I actually helped her with her pitch deck. And so we had just like a working session where she had a pitch deck. I was like, here's my feedback. You need to sell the problem better. I mean, just that period of like, what is it actually like to work together made both of us even more sure about this being a good 10-year marriage. Yeah.
So I'm going to push you on that a little bit, because if I was a founder and I thought you could help me on my pitch deck, I'd be too afraid that, man, I'm not sure what the right story is supposed to be. I feel like I need to prepare to come off smart so that when you help me, you're like impressed, versus like I would feel awkward coming to you feeling like, Jess, I don't know what the right story is for this round. I would be afraid you're going to be like, you don't, how do you not know what your story is? And I'm going to tank my chances with you by coming to you with questions in an unprepared kind of way.
So I think because with Amira, the first context was not, here's my crappy pitch, help me fix it.
Right.
It was like, hey, I'm, just wanted to get to know you. I probably will raise. And I was like, okay, well, why don't let's actually try working. Like we agreed that that's something that we would do. I also do just randomly for especially female founder office hours and all raise help with pitch decks. Cause it's just like a thing that I can be helpful with. It's like one of the parts that I teach at the Sequoia program is actually the storytelling piece. Not fundraising storytelling, but like, what's the story of the company? How do you sell the problem you're solving? Which is actually the key to fundraising. It's selling the problem, not the solution, in my opinion. And so working on that together, it's just like something I enjoy doing. And very few people have it perfect right out of the gate. So I guess I just don't assume that. Yeah.
Right. And I think one thing that I always say too is, interesting people rarely understand why they're interesting, because they're not necessarily interesting to themselves, right? It wouldn't occur to them to act any other way. And so sometimes it's just helpful for somebody to get that other perspective, to be like, I think the most interesting parts of your business or your problem or your company are this is the way I see it.
Yeah.
Which may not be the way that they think about it, or it's just not chronological for them to think about it that way.
I think also if you're a founder, you just think very differently than the way investors are thinking. And I think that's just getting to the topic of fundraising. I feel like that's one of my biggest learnings coming to the other side of the table. When I was a founder, all I thought about was the solution, right? I knew what my problem was. How do I just solve the problem? How do I iterate through? How are my competitors solving the problem? And then when you're on the investor side, you look at, hundreds of companies a year. And what you're thinking about is this problem worth solving, or for me that I want to be involved in? And you're not comparing the company against its competitors. You're comparing that company to all the companies. And so it's really a matter of selling the problem that you're solving, not just selling the solution. And so that's the piece, I think, that it's just, you have to understand the audience that you're speaking with. And that's how investors think. So, yeah.
It's interesting. We built this tool called feedback.vc, and it's a sort of blind panel for an anonymous panel on both sides. So I tell you, here's my problem area, here's my solution, but I don't say who I am. I might say, this is the team of former marketers, but you don't know whether they're men or women or white or black or what school they went to or all that.
I love that.
And so we've now sent this through enough times, because VCs can opt in to a de-anonymized intro. So they say, wow, this sounds really good. I do want to know who this team is, actually.
Yeah.
And most of the founders, if the VCs want to know, they're willing to uncloak themselves, basically, right?
Yeah.
What we've found in some of our statistical analysis is that the ratings on two areas count for more than any other ratings to facilitate intros. The problem area is the number one thing by far.
Like all, you got the data to back that up.
all of the, actually one of the least predictive ones was the solution, actually, right? Yeah. So you spend all your time, oh, I have the best widget in the world, X, Y, and Z, here's why it's the best. And like, that didn't matter. It really didn't matter. Yeah. The other was the unit economics of the business. And I don't mean that so specifically, but I just basically mean like, is this a good way to make money?
Yeah.
At a high level kind of thing, right? So, I mean, you probably appreciate that, like, making money off affiliate fees in fashion is incredibly difficult, right? It's just not a big fire hose of money.
Yep. Yep. We got a lot of
And
rejections for that until we changed
right,
our business model. Yeah.
right, right. And so it like the description, the high level description of the way the company makes money was much more predictive
Yeah.
than, you know, than even their traction, right? So it didn't even
Yeah.
matter if you were making any money yet. It's like the how was very important. So we do have data to back up what you just said. The problem set is incredibly important. I just want to ask you about firm differentiation, and what you said about getting the right partner is maybe part of the answer to this question. Is there such a thing as a Sequoia deal or benchmark deal, or like where certain types of companies fit better with certain firms, that you just have a style of company? Or is it really just if your partner is interested in your area, that's good enough?
Um, I do think that some of the like larger sand or top sandhill firms in particular have some sort of like almost like unspoken threshold on like how big could this get, and is
Mm-hmm,
this likely to be like the threshold might be a bit higher than
mm-hmm,
like your solo capitalist or micro fund sort of. I think that that is something that the Sequoias, Andreessens, Benchmarks, Excels of the world
mm-hmm,
will look at. So I think that's the maybe one thing.
mm-hmm.
But I will
Do you
say,
think
I mean,
that's a function of fund size?
no, I think it's a function of like the kind of returns. Um,
Gotcha.
yeah, that we're expected to drive by LPs. So you know, you have to be able to. There has to be a path towards a, you know, multi-billion-dollar market cap.
Mm-hmm,
Like, although I will say, it doesn't have to be. Someone asked a question about TAM, I think, in the Q&A,
mm-hmm,
but um, TAM is one proxy for it. But the thing is, some of the best companies kind of create their own category almost. And like Airbnb, that was like not a thing before, where you'd like
mm-hmm,
book a room with a local and stay in their house like that. I know hotels were a thing, but they kind of created
mm-hmm,
a category. Um, you know, Dropbox created a category. So those kinds of companies, it may not be obvious at first in some TAM number that somebody's done a market size study
mm-hmm,
on, or Unity is another example. It just IPO this last week, but Unity started as like mobile gaming like engine, and then it grew as, you know, AR, VR, CAD, like all these other use cases came along, and it exploded to be much bigger than we'd anticipated. So
right.
it doesn't have to be big now, but just like line of sight to that. So could be hazy, but just some line of sight.
Mm-hmm,
Um, I think that's one thing that distinguishes maybe the
mm-hmm,
way we go. And then I have noticed that myself and my partners, we have a tend to react a little less favorably to ultra slickness or exaggeration, like
mm-hmm,
too little too salesy. Like I just, and I think we probably missed some great investments and
mm-hmm.
returns because of that. But I just noticed that we don't. I've seen us react poorly to that.
Yeah. Well, I
But I
wonder
mean,
if
it
it
really is.
almost,
It's so dependent on like the individual. Like like I said, everyone has their own style, the different set of things that they look for, and we're not prescriptive about it across the partnership.
gotcha. So let's focus on some specifics about like the sort of the here and now and the environment that people are sort of dealing with. Um, I've gotten a lot of pitches that somehow, and it's interesting, like it almost has felt like over the last 6 months that like you couldn't pitch without acknowledging that coronavirus existed. And it's sort of like, yeah, we know we were all going through it, like nobody forgot about it. But I think a lot of founders have either um, tried to position their companies in trends related to what's going on right now. And I'd be curious as to your take on how the impact of everything that we have gone through over the last 6 months has impacted your thinking about just technology trends, just on the whole, right? Whether it's the move to virtual or online commerce or resiliency or what have you, like how has the last 6 months impacted how you have thought about tech trends, if at all?
Yeah, the work from anywhere thing has been a big one. I think a lot of companies are getting rid of their leases, shifting to work from anywhere. People are like moving all over the place. And that's opening the door to hiring talent in other countries. So some of the folks who figure that out well are going to have a massive advantage, just because San Francisco engineers, New York engineers are getting, it's really expensive. And so I'm noticing more and more companies being built distributed, especially the seed ones who have a lot more flexibility. I think that's going to be a trend that sticks. I look a little bit at healthcare, and I work with one telemedicine company called Maven Clinic. It's actually New York based, women's health platform. They've just seen massive tailwinds in people. Like, I think basically the future that was going to come in 10 years, like was fast forwarded to like, compacted into a year. The work from home trend, the work from anywhere trend, the convenience of like talking to your doctor over Zoom, and that's actually fine. They didn't actually need to look into your ear with a little thing. They just needed to talk to you about your symptoms and how you felt. Like, everyone has had a taste of that now. And so all of that has just been accelerated. So I think that the important distinction is which are the things that are going to stick and which are the things that are going to like snap back to normal. I think the more distributed culture is going to stick. I don't think
ask you about that,
social
actually.
events all online are going to stick.
No, I agree with you on that. Let me ask you about that team distribution, because as someone who comes from sort of a product and engineering kind of background, you have spent undoubtedly lots of time at a whiteboard. And I think there's a missing element to that like, yes, we can communicate virtually, and, if we had tried to schedule this meeting at any other time, I'd have to figure out when you were in New York for a board meeting, and it'd just be extra layers of complication. And that's great in many ways. But I do think there's something that is lost on all virtual collaboration. And I'm wondering whether or not, I'm wondering whether or not you agree, and whether or not you, how you think the lack of in-person can affect teams as well, and what you're even telling your portfolio companies around things to watch out for as well.
Yeah. What I worry about is it affecting psychological safety. So I think I think Google maybe did this study, but like one of the biggest predictors of like team performance is the level of psychological safety on the team. Meaning, do people feel safe enough that they can express their real opinion and be like truth-speaking, right? And that requires the team to have somewhat of a bond, trust, oftentimes a little bit of sharing of who you really are beyond just your work persona. And I worry that without the casual, random, like I bumped into you in the kitchen and asked you how was your weekend, like we're just in back-to-back Zooms where we like don't have time for those pleasantries. We're not randomly running into each other. We're not like doing things together. Like, literally I really miss walking into the kitchen at Sequoia and running into a partner and then like eating some food together, right? Like, so that extra bit of sharing who you are beyond like the, work day to day, when that goes away, I think it lowers psychological safety, and then I think that will lower team performance. So we've just got to figure out a way to make time for it. And so the best companies that I work with that are really strong at culture are figuring out how to weave that in on a Zoom level.
It is interesting how some of those things sort of get lost. I had a portfolio company that, I don't know what context it came up, but they were sharing some photos of some product test photos, and somehow one of the employees was demonstrating something, and the photo caught the back of her head, and one of the other people on the team said, "Who is that?" And they're like, "Oh, it's Jane." And they were like, "Oh, because I've never seen the back of her head, actually," because in Zoom we're always
Yeah, yeah,
sort of
yeah.
full on, you know, face, and you realize, like, right, we've never actually seen, like,
Yeah,
maybe we should all just spin around and just, you know, get the full 3D head rendering. So
yeah,
yeah, I totally buy into that the team bonding, it's not just entertainment value. It's not just doing lunch because it's something to do. It involves how we relate to each other around collaboration. That makes a lot of
yeah.
sense. I also just want to mention too, if it feels like I'm ignoring the questions, I'm because of my sort of somewhat temporary setup, I'm on my phone doing this, and so pulling up the questions on the side is a little more difficult. But I will make sure we get to the questions here at the end. Um, you talked about being uh, running a company where you were pitching people who weren't necessarily the target customer, and how that felt as a founder.
Yeah.
Um, can you talk about being the target customer or not as a VC now, and whether or not that makes you sort of more or less skeptical, because you are potentially the target customer, but you are one target customer,
Yeah.
and how that affects getting a particular pitch.
Yeah. Um, I think the further I am from who the customer is or understanding the customer, the more I need the founder to explain the customer or
Hmm.
sell the problem even harder. And I like to see the problem sold through the customer, the lens of the customer, because I think customer obsession is one of the great shared traits across some of the best companies. Um, some some founders go as far as to include like the personas they wrote in the appendix of the deck, or they
Hmm.
might do a diagram that's like, here's the chain of pain for the enterprise that I solve, and you know, here's how I solve it. And so just if it's like manufacturing or some vertical industry that I just don't know anything about, the more detail there is there, the better. Because at the end of the day, I don't have to be the customer. I don't have
Right.
to understand the industry that deeply. It's the founder that has to. And so they have to just demonstrate their understanding of it. And in particular, convincing the investor that they do understand uh, is important. Yeah. But there's some founders where I'm like, you don't even need to like, can we skip the pitch? I already looked at the product. I watched your 25-minute onboarding video. I'm like in love with it. Let's just talk about like and I might go into a bunch of other. It just kind of depends. Yeah.
Gotcha. And are you looking at new things as a generalist, or are you focusing your scope on particular areas?
I think the encouragement at at our firm is to try to be fairly general and be open. Um, I will say though, what I like to think about is, can I be a helpful board member to you? And I think I can be most helpful in consumer, especially consumer social entertainment, the wacky end of the spectrum where the odds are the lowest, where you need
Hmm.
to growth hack, or you need to like, even if your product is cool, it's like not cool, you know, a year later, it's just like the treadmill of coolness sort of area. Like that's where I requires a lot of creativity and a lot of grit because it's like so hard. That's kind of where I built a company, and you know, I think we were like all right for 11 years of coolness, so or semi coolness, I don't know. But I that is probably where I can be the most helpful.
Hmm.
Um, then you know, with Ironclad, which is digital contracting platform, that's a enterprise, but B2B to C, where
Right.
it's a product I would have used and understand because I signed so many contracts uh, as a founder. And so that's like bleeding into the edge of enterprise. And then healthcare, the healthcare company, I don't know that much about healthcare industry. So luckily partnered with the fantastic folks at Oak who know healthcare really well, but it's a customer that I understand. So I guess I if you had to think about the consumer social spectrum to the consumer utilitarian to B2B to C to like enterprise manufacturing, I probably stop somewhere in the enterprise, but more towards the B2B to C. Yeah. But
Gotcha.
who knows? That
Cool.
could change over time. Yeah.
One of the questions I think I saw that was popped up, I caught half the question, but I think I know what it was. Because you mentioned your email address is on the site. Have you done a deal from a cold pitch
Um,
or even taken a meeting?
oh yeah. I've definitely taken meetings from cold pitches. I don't think I've done an investment. I have done two that came through female founder office hours though, which are fairly random.
It's pretty open. Yeah.
Yeah,
Yeah.
yeah. And one was
Gotcha.
uh, she's Latinx. She never raised any money before, never worked in tech, like very few connections in tech. So I think that's definitely not cold, but it was kind of random. Yeah.
Gotcha. So one of the questions had to do with the line between personal and fund investing. And there are some GPs that will occasionally, kind of do something on their own directly as an angel. How does that work? I mean, is there ever an instance where you're sitting here going like, I might want to do that, but not on behalf of the fund, or you're just all fund?
Yeah, we're not allowed to. We're pretty
Oh,
strict
at Sequoia. Okay.
just to make sure there are no conflicts of interest. Nobody's allowed to do anything except like maybe invest in a restaurant. Yeah.
Hmm. Could you comment actually, because one iteration away from that is people hear a lot about scout
Mm.
programs and they
Yeah, yeah,
don't
yeah.
they don't know what to make out of them. It feels like um, a great thing for brand, but then they worry, is there signaling in that? Like if I take a Sequoia Scout, but Sequoia doesn't do my A, does that look bad? How would you describe that program and why someone should
Yeah. So
think about it?
the Scout program is our angel program. And so, each Scout has a small budget to uh, do investing over the course of 2 years. I think there's 100 something Scouts. The program is in its 11th year. I think Sequoia kept it secret for like 6 years, which is
Hmm.
kind of amazing. Um, uh, for the partners, each of us works with our pool of Scouts. It's sort of like, who are your favorite listening posts out in the ecosystem? I often think about it like, what are the tributaries that I don't cover or the firm doesn't have a lot of access to? So, I work with a lot of Black Scouts because I think we don't have great coverage there, and a lot of women Scouts. And I think about it as a combination of listening posts for Sequoia, but then also helping people who I think are awesome develop into angels if they don't necessarily have the means to do that, right? I was a Sequoia Scout, and I was a founder at the time, so like I wasn't paying myself anything. I didn't have any money to be an angel investor.
Hmm.
So the access to the program and the know-how and to the partner to like give feedback was like incredibly valuable. Alfred and Mike, two of the other Sequoia partners, were also former Scouts. I think 21 Scouts have gone on to become professional investors at firms. So it's both a sort of talent thing and a sourcing thing. Yeah.
Gotcha.
As for how to think about the Scout investment, I have not heard of there being any signaling like risk with the Scout investment because at the end of the day, it is really that individual investing. And even on the cap table, I don't think it even says Sequoia, but
Hmm.
almost nobody ever gets questions about that I've seen. Yeah.
Gotcha. There was one question earlier about the company creation, the company design program that Sequoia runs. You do that internally. Um, would you recommend any particular programs? I mean, there's a whole group of these new pre-company founder training kind of programs. Are there any ones that stand out to you? If I'm thinking about like, how do I become a better founder? And I'm not a Sequoia founder, what would you recommend that I go to? Where do I learn?
That's a great question. I have been thinking about that. Maybe if we should
Hmm.
open source some of our programming. We put a little bit of it up. Uh, we did some of it at a TechCrunch event, so there's a video of
Hmm.
that.
I mean, some of the startup school stuff is public.
Yeah,
Some of
yeah,
the YC stuff is public.
yeah. I would say a lot of firms, including us, use it as like a incentive to actually take our money, you know?
Hmm.
So I don't know which of the programs are sort of free access other than maybe startup school,
Hmm.
um, which I think is still a very different experience than actually being in YC.
Hmm.
Um, I think rather than recommending curriculum, the more important thing is to, and part of the value of a company design program too, is actually the community you enter and just being part of. I think it's more important to find like 4 or 5 founder friends that you trust, who you can get advice from, but who you can also just be real with. You know, when you have those moments where you're like just questioning everything and you're like, well, why did I leave my other job to do this? Doesn't the odds are bad and things are, you know, the wheels are falling off the bus. I mean, that happens like all the time, right? It's just like almost like a rite of passage. Like you want someone who understands the and can share, commiserate or cheer you up.
Hmm.
And then you also need someone who understands the highs, right? Like there are moments when you feel like I finally was the best version of myself today. I did the best all hands I've ever done and I inspired the team and it was just awesome. And it's like really hard to explain that sometimes to other people, your friends who are not CEOs or founders. You can't brag to your employees about
Right.
that. And you just,
Sometimes spouses don't want to hear about it
yeah,
at
yeah.
all.
They're like, great, you were a manager, fantastic. You're like, no, like you don't get it. I did the perfect pitch. I did the like, you know, I finally figured out the
Mhm.
right metrics. Like whatever it is, like someone who gets it and can celebrate the moments with you. I think that's really important. Yeah.
So, so I'll do a little pitching, and I'll say that for those of you who are thinking about these kinds of programs, on Friday, as part of fall fundraising days, we're doing a panel with 3 of these types of programs: On Deck, Humans in the Wild, and Antler. And it's all of these sort of pre-company founder support, founder creation. I don't think the industry has quite coined a word for those
Yeah.
sort of pre-accelerator company, you know, if you will,
Yeah.
but they're all aiming to sort of help build community and help train founders. So we're gonna, you
Yeah.
know, host a very friendly and collegial panel about 3
Yeah.
different choices for
Cool.
that.
Yeah. You
So,
know, I have heard good things about On Deck,
hmm.
and there's another one called Interact run by Maren Nelson,
Hmm.
and another one, oh, I'm blanking. Well, at least those 2. Yeah.
Gotcha.
Yeah.
Cool. I didn't know about Marin from Clara.
I think she's
Cool.
been running it for like 10 years.
Yeah. Awesome. Um, what are some of the lessons that Sequoia has learned from some of its investments that don't work out, actually? Are there any things that you guys feel like you've now picked up as kind of red flags, that even from a, you know, a top firm, that, you know, when things don't work out, what can entrepreneurs learn from?
I think we have this, th- there are these inflection points in companies, um, where sometimes you have to make a tough strategic choice or make a tough decision around maybe a layoff or letting go of a VP or an early employee or your co-founder, or just like a change in trajectory, either positive or negative, and there's a decision tied to that. And I think a bad failure mode is to postpone the decision or not make the tough decision, and to make it too late. And I think that is um, a big lesson. Like you need to recognize when you're at one of those critical junctures where you're about to make, you're going through a crucible moment, and you have to be intellectually honest about what the right thing is to do for the business, not necessarily the easy thing, and then make
Mhm.
that tough, brave choice. Um, yeah, I think that's right when coronavirus, back in March, we wrote a memo. We called it like the Black Swan,
Hmm.
coronavirus, the Black Swan. It was just a blog post, but and we shared it internally and then later externally. And it was just about kind of that, like, hey, I know everyone's like right now, coronavirus is just starting to appear in the US, but we've talked to our partners in China and it is real and you need to worry about how it's going to affect your business.
Hmm.
And the lesson we've learned over and over through 87 crash, 2008 financial crisis, like all the dark moments, uh, the founders who are decisive and make the tough decisions are the ones that survive. And some of the best
Yeah.
companies are created during the worst times. Like Airbnb, Google were all created during like bad times to start companies technically. And so just that, yeah, that's that advice.
Yeah, no, and I think like people forget too that not making a decision is actually in itself a decision made. Like you may not be particularly intentional about it, but like not cutting people is a choice to continue to employ people. You
Yeah,
know, not fundraising, not pushing back a launch is a choice not to be launched on any different given day, right?
yeah,
And
yeah.
so
Yep, you're
uh,
exactly right.
yeah, that's important stuff too. Um, one last question, unless anybody else sort of beats me to the end of the buzzer here with the Q&A part of um, the Zoom chat. There's a question about sort of frontier tech, and I'll package that with just problems yet to be solved. Are there any areas where you're trying to like kind of peek around the corner and say, this is a kind of next decade kind of thing that you would love to see more people working on, whether it's a technology area or a problem set area, that your ears perk up when you hear somebody working
Yeah.
on it?
So what's interesting is the term frontier tech it goes back to that problem versus solution thing. I think of
Hmm.
frontier tech is a solution. It's not a problem. I think there will be interesting sort of frontier tech to some big problems that I care about. Just looking outside at like the sky and like the smoke in California, I think climate change is a big problem for humanity for the next.
Right.
Well, it's a problem right now, clearly. That I
Right,
think
which quantum computing
frontier
may or
tech.
may not be the answer to, right? I
Yeah,
mean,
it could be. Maybe there's some solution to remove the carbon from the air. What it might also be a consumer app that makes me like change my behavior. It could be
right,
an enterprise thing that makes companies pay for carbon offsets or track, how they're doing. So I'm totally not against. I mean, I'm totally open to frontier tech, but I think I care more about the problem it's solving. I think climate's a big one. Income inequality.
hmm,
That requires frontier. Yeah. Space. Space
sure,
exploration.
sure.
Yeah.
And last thing I would say is just do you and maybe it doesn't, being in the prediction game after a year like 2020 is not make a lot of sense, but as you talk to your companies about expectations of the nearer term market, right? If you've got a company saying, well, we're making plans now, um, what's your guidance to them on, when they can hope for things to be more normalized? Is there sort of a consensus around where the optimism point and how you're sharing in full, knowing that you are not an epidemiologist, that you are
Yeah.
not, but just even like what are people saying on boards about that?
I don't think anybody has a crystal ball. And so the guidance, honestly, is like take it quarter by quarter and like be
Hmm.
prepared to be nimble. And if you see signs going in one direction or the other, be decisive about making a change or making the right move in that moment. But like, as for, a year out, where we're going to like, I think the guidance is like, don't necessarily try to predict, but react quickly when you start to see signs. Yeah.
Right.
Not
I think for me
sorry.
personally, I think the biggest uncertainty is how will consumers behave in a time period between when numbers are good, but there is yet to be mass distribution of a vaccine. Like there is a period of time in which, from a personal risk perspective, it should be okay to do certain things, right? And I think we feel overly comfortable that like all of a sudden a vaccine means everything's good, right? Like there's a big question of like, should we be wearing masks and shaking people's hands, and or not shaking people's hands regardless of whether there's a vaccine or not? There's a lot of personal risk things that I think this is exposed.
Yep.
And so, and I think it's actually been very interesting to be in New York during this time period, because our numbers are super low right now, and luckily continuing to trend lower. We'll see as some kids start to get back to school. But I do think there will be this question, and I've even noticed personally, where we are starting to act differently in a way. Like my wife and I were just realizing that like, it's probably okay to hug my dad when I go back in a way that like we weren't doing in March.
Yeah.
Right. But if we're being careful now, the reality is with 200 cases a day in New York, in a city of 8 million people, like that's probably okay.
Yeah.
Right. And it should be okay for his mental well-being too.
Yeah. I feel like physical contact with your close people is going to come back for sure. I think with strangers, it just has left a generational like imprint that I think people will not go back to that. It's just like why risk it almost is my guess. I could be totally wrong.
Yeah. Why do we feel the need to touch all these strangers? Like it's just, it's kind of weird, right? Maybe we shouldn't go back to that. Cool. Well, listen, thank you so much for spending this time with us. We, on behalf of New Yorkers, we look forward to when you can be in New York for in-person board meetings and to talk to us in person. And I'm sure, we feel the same way about going out to the Valley to pitch. Like it may have felt like a drag beforehand, but I'm sure the next time we do that in person, we'll be thrilled to get on a plane.
Yeah.
For sure.
Thank you, Charlie. You asked like such interesting and thoughtful questions, which I think is very, very not your average, like, I don't know. So thank you. And
thank you
for putting together such a nice series, fall fundraising days. I think the material and like the things like which community to join, like that is such a relevant and interesting topic that I think most would not everyone would think to do something like that. So anyway, I think this was a lot of fun. Thank you.
I think actually part of it, and I would give this advice to any VC, is to realize that like, and I don't mean to end this on a downer, but like statistically, most of your audience is not going to raise, and they're not going to raise venture, but that's okay. There are plenty of great businesses built without it. There are plenty of great careers. I am an 0 for 1 failed founder, and I'm okay. Like I did fine, right? And so I always try and think about like, not here's my advice for the one person in the audience who's always going to be able to hire the top engineer and always be able to get they don't even need my help. It's like, it's the everybody else crowd. And I think the answers are kind of a little different than that. So I try and focus on like, if I didn't know anything, where would I go? And that's, you don't get that too much on VC panels. So cool. Thank you so much.
Charlie, thank you, everyone.